The year 2023 was a disastrous one for FMC Corporation. It dropped from a high of $133 in January to its current price of about $60, which is more than a 50% drop. Let's investigate the reasons for this enormous price drop. Is this a market overreaction? Can we capitalize on this? FMC Corporation is a global agricultural sciences company that produces crop protection products, plant health solutions, and precision agriculture technologies. FMC's business is susceptible to the agricultural sector, as it depends on the demand and supply of agricultural products and the environmental and social factors that affect farming. For example, FMC's stock price dropped by 12% in the third quarter of 2023, mainly due to lower than expected sales and earnings caused by inventory destocking and drought in Latin America. FMC's customers, distributors, and growers reduced their inventory levels to conserve cash and avoid losses. This resulted in lower sales volumes and revenues for FMC in the third quarter of 2023. However, is the stock price drop an overreaction? FMC has been growing its annual revenues, which more than doubled from $2.5 billion in 2017 to $5.8 billion in 2022. As things stand, the 2023 revenues should be around $4.5 to $4.7 billion, which would be a 21% decline from 2022. The forward PE ratio is around 15 and is the lowest of the past 5 years. Let me walk you through an optimistic scenario based on the latest guidance numbers provided by the company. Imagine FMC Corporation achieves its 2024 guidance of $4.65 billion to $4.85 billion in revenues. They also meet their 3-year rolling financial goals of revenue of $5.5 billion to $6 billion in 2026, and their PE ratio returns to the historical average level of 19. In this scenario, it isn't far-fetched to think that FMC stock will be priced at $100 or maybe even higher in exuberant market conditions, which is about a 70% upside. Now for a pessimistic scenario. Let's take a look at 2016 when the stock price was about $30, having dropped from a high of $67. There were several factors such as lower than expected earnings and weak demand, which we can say is also true of today's environment. They also announced a dividend cut and they faced a lawsuit for a breached merger agreement. This led to investors losing confidence and the stock price dropping to $30. Back then, this represented a 56% drop, which is comparable to the drop we had in 2023. This reinforces the idea of cyclicality in this stock and the broader agricultural sector, and also that the low performance is already priced in. Please take a moment to like and subscribe. There are key differences between 2023 and 2016. Mainly, the dividend was much lower and they also announced a cut. This is extremely improbable today as FMC Corporation's dividend is covered by its earnings, as it has a payout ratio of 49%. This means that FMC Corporation retains enough earnings to reinvest in its business and growth while rewarding its shareholders. Not to mention, we currently have a better yield of about 4%. And that the dividend has grown over time ever since. So you are getting a good dividend while waiting for the optimistic scenario to play out. Now, I don't see the stock going back to $30, not even in a pessimistic scenario. I can imagine, however, the stock being flat or maybe even dropping 15%. But, like I said, you are getting paid to wait. This is the type of scenario where, heads, I win, tails, I don't lose much. I am willing to take this risk and will be investing in FMC. This is not financial advice. This is my own opinion and research. Subscribe for more educational material like this.